What's been driving the action in utilities this week? Is it simply just a rate story? Interest rates decline, utilities are very interest rate sensitive, and utilities go up.
Clearly, Frank, it is an interest rate story. I mean, we went into the year, rates started rising. We had a banner year in 2022, but we've lagged the S&P so far this year 30% before the Fed decision. So we severely underperformed. All of a sudden, the Fed comes out, I guess, on Wednesday, announces they're going to have 3 cuts, and it's just off to the races. Santa Claus came early for utility investors. I think that thematic is going to play through 2024. Average yield for utility stock right now is 3.6. I think earlier you had mentioned that the 10-year now is dipping below 4.
Right.
It's a very attractive yield with some growth versus the 10-year.
Yeah, I don't think a lot of people want utilities in their stocking this year, though, Anthony. I do want to ask you a question about some of your research. You're saying right now utilities are almost kind of a regional play. You like the utilities out in California and also one in Michigan. Why these specific regions?
So location is going to matter for utilities. If you think about utilities rates are based on the state regulators. So we have 50 regulators plus a Washington, D.C. regulator. And some regulators are more supportive of companies' investment, and it's going to preserve that earnings growth. As you mentioned, we like the California regulators out there, which are very supportive of utility earnings growth. We have PCG up north. We have EIX, Edison International. Then we have Sempra down south. But you also mentioned Michigan, DTE, and CMS. Michigan regulators have offered very balanced decisions, providing adequate return for investors. And we think that growth is going to continue. We're going to see those names growing somewhere between 6 to 8%. Cautionary, though, on the flip side, we just noticed yesterday, Illinois came out with a decision, average return on equity or average ROE across the nation is about a 9.5%. And Illinois just gave out decisions to Ameren and Exelon, sub 9. So location is going to matter. You're going to look to see regulators that offer attractive return for investors, but also give balanced decisions on companies' investment plans.
Yeah, you don't often hear about utilities as a regional story, but you're 100% right. Those rates are regulated by different state agencies. So I want to talk to you about what you're seeing right now is one of the best-in-class names when it comes to utilities, Nextera Energy Partners, and you're saying this is also a dividend play.
This is clearly a dividend play. So this is sort of a side to our utilities. This is what we call a yield co, and this is used as a financing vehicle for the large cap NEE, Nextera Energy. So what NEP was doing was financing some of the growth at NEE. It offered an attractive yield. Right now, I think the yield is 13% or 12%. We're saying the yield probably gets cut in 2025, but investors could clip that coupon of 12%. And even at a 50% cut, you're still getting an attractive 6% yield. Again, as you talked about in the 10 years below 4. So for investors looking for yield, NEP or NEP, they call it, offers a very attractive return.
Yeah, I'm looking at NEP before we let you go. Shares down almost 60% over the last year. So you're saying that dividend, even if it's cut in half, right now it's at 11%, but you're saying even if it gets cut down to 6%, the dividend makes up for the lack of price action there?
Yeah, so again, that stock in NEE and NEP did really well as rates were coming down. NEP is a yield play where, you know, as their cost of capital declines or the price goes up, it offered attractive financing for NEE. So it's very confusing there what's going on. But the dividend is stable, but the dividend was stable for so long, but as stock prices came down in NEP, we're forecasting a cut in 25, and that's why it's a very fat yield right now. But even with a cut, I mean, as we all know, Frank, double coupons don't last forever. And we see even with a cut, you're still getting an attractive 5.5% yield.